thing going with you and take it from there. So, hey, everybody, Matt Perry, AA Real Estate Group here with you. Thank you so much for checking out this recording. We wanted to do something a little bit special this week in particular. For those of you who have been paying close attention, and hopefully most of you have been, you'll have noticed that we've had the guidelines come out for the CARES Act and a couple of the other things come out within the last couple of days. So we wanted to bring in our two resident CPAs, we call them, Rio Monticelli. We have Anthony Pagano and Ron Dean with us here. And we kind of wanted to bring them in to do kind of a Q&A style just to make sure that things are paying attention, so to speak, and give you some answers a little bit about what you guys should be paying attention to yourselves when it comes to your business. So with that being said, Anthony, I'm going to turn the floor over to you and just kind of give the highlights for what people should be paying attention to this last couple of days, and more importantly for their business, what they should be paying attention to with their numbers.
So over the weekend, the forgiveness application was released by the SBA for the Paycheck Protection Program. It's a very extensive application. It's 11 pages long and requires 3 or 4 levels of data entry, as well as calculations ranging from payroll costs incurred to full-time employee equivalents. So it's a very extensive application. As I mentioned, it's going to take some time to fill out. The things that are going to be important to kind of ease the burden for that application are, as we've been mentioning in the in our webcast previously, documentation is going to be hugely important, so you can have that information available to do those applications. Additionally, you're going to need to submit all that documentation with the application to substantiate some of those figures that you're listing on the form. So, I mean, at this point, I would say if you're comfortable with it, doing those calculations and filling out the application yourself, congratulations. It's going to be a tremendous challenge, I think, for a lot of people. But obviously, we're here to answer any questions relative to the application and provide as much insight as we can.
Nothing like 11 pages of federal guidelines to go through to make sure that all your ducks are T's are crossed and your I's are dotted, all that, so to speak. One of the misnomers that's out there, and this came out a couple of weeks ago, where the government basically said anybody who has a $2 million and under loan, we're not going to audit you. People went, hey, fantastic, I'm in great shape. Then this 11-page forgiveness loan came out, and people went, ugh. What are you saying to people who, on the one hand, are saying, I have less than a $2 million loan, I'm in good shape, and then don't want to pay attention to this 11-page forgiveness application?
Well, in what, I guess my thought is in what sense? Because my thought is, under the $2 million, safe harbor, I would say that you can breathe a little easier in the sense that you're not going to be, as prime a candidate to have anything reviewed or monitored. But I would say that even if you're under the $2 million, you still want to take the application very seriously and make sure that you have substantiation and confidence in everything that you're filling out on that form. There's actually a spot on the form, a checkbox to highlight whether or not your loan is under the $2 million. So that's a focal point when you're filling that out. But I would say if you're under the $2 million, you can breathe a little easier in the sense that you're in the safe harbor zone. Safe harbor is a really,
everything being critical, not to say that one loan, if you're under that $2 million, that you shouldn't just forget about it and just kind of phone everything in.
Yeah, exactly.
With the process of documentation, is there anything that would be more critical or more important to be focusing in on and highlight and pay close attention to in terms of your numbers and how you're using the money compared to, say, just a normal getting ready for your normal tax returns as you were getting ready to file a company return? Is there any real difference there between the two?
Yeah, I think that when you're going to be going for the loan forgiveness, you want to have tedious records that are in accordance with, most importantly, the time frame. So really make sure you understand the covered period of, that 8-week clock starts on the day you receive those proceeds. And then as we recommended, it's best to segregate those funds from that loan. So if you have those loans in a separate account, you really want to be careful and methodical in the sense that you want to have documentation and a trail for every bit of that that money that you've used over the 8-week period. Where the best documentation for everything obviously is the canceled checks from that account, and then the third-party payroll reports are going to be a great tool to help substantiate the payroll costs, and then invoices for some of the other qualifying costs, health insurance and retirement plan contributions, interest on business mortgages, business rent. You'll need the lease agreements. So I think that the focal point should be really try to understand and make sure that you're capturing everything in that 8-week period. And then I think from there, for every cost that you incur with those loan proceeds, just make sure you have some sort of support in some way, shape, or form.
I'm curious to get both your folks' opinion on this. Having read the guidelines and having put the guidelines out, what would you say is going to be the number one thing that people either forget to do or get caught up in doing and then have trouble having the loan be forgiven because maybe they weren't paying attention to something, maybe they forgot to do something, maybe they didn't do it the right way? Where is the one spot that you envision people getting tripped up on, whether it is by accident or on purpose?
So the one spot that I'll chime in here is where I see people getting caught up is reimbursing their complete payroll. For instance, a client has their payroll come out of their operating account every biweekly, weekly, or what have you, and they have the PPP money in a separate account, and they reimburse the operating account for the full amount of payroll. The issue is FICA and Medicare employer share is not covered under this. So you can only do it for gross wages and state unemployment. The employer share of FICA is not covered as a qualifying expense. So what I'm seeing right now, communicating with clients, is they're sending me their weekly payroll journals on things that they think are able to be qualifying costs for this forgiveness program, and I got to go back to them and say, you got to take out FICA and Medicare. It's happening on a 90% clip on clients right now.
Is there any way that people can pay when they're looking at something and they're looking at their overall payroll numbers that they can be looking at for a snapshot to see if that applies to them? Or is that something that they need to go into their payroll, whether it's their own party or it's somebody in their office handling it, just to make sure that that's all covered?
Yeah, so if you got a good payroll company like an ADP or a Paychex, they usually give you a weekly summary of gross wages, employer liabilities, and in that employer liabilities, the only thing that you're going to want to take is the state unemployment and the gross wages. You're going to want to exclude any employer FICA or Medicare.
Awesome. So I think that's a pivotal point as people start to say, well, everything's covered, payroll's covered, bring everything into one boat, but that's clearly not the case. So I think that's a great point to have highlighted. Anthony, what about you on your side of things there?
I think that, going off of payroll for a second, I think that, like I mentioned, some of the questions that we still have relative to some non-payroll costs is just the timing and the nature of some of the payments. For instance, I mentioned on one of the previous webcasts that, payments made and payments incurred during the 8-week period are going to be forgivable. But, you start to get into a bit of a tricky situation where, payments made during the 8-week period might be for, for instance, rent that's been due for 3 months, if that's been kind of past due for a long time. And, do you lump all 3 months of those payments into that one? And if it's made during the covered period, is it all forgiven? And additionally, there's, say your 8-week period ends on the 1st of July, as an example, and you pay the rent for August on the 1st of July, which ends up being 3 months of rent during the covered period. It's just a little unclear about some of those things right now. So I think that, like I said, we're going to be waiting to hear more about how those payments are going to be treated, costs incurred and paid during the covered period. But I'm fielding a lot of those questions as far as, I didn't make payroll for the month before I got the loan. Can I catch up everybody and, get caught up? And, there's limitations on how much you can pay people. Obviously you're capped at 100,000, and anything over that annualized out isn't going to be forgiven. So I'm running a lot of those calculations on a daily basis for clients to let them know how much they're able to pay their employees during this time. Yeah, I think that, some of the paid versus, incurred concept, I think, is going to be something to look more into as we go on and get more guidance.
That, what you're just saying there, that perfectly leads me into my next question here, which is where we stand right now. As we've talked about it on all the webcasts, this is such a fluid situation. This is a constantly evolving scenario. We've never been in anything like this in this economy as currently situated and currently built ever before. The last pandemic was back in 1918, and it was far less advanced back then. So this is a completely new landscape that we exist in right now. Where do you think, and what do you think comes next? And where do people need to be paying attention to? If this guidance that was put out was the last thing that people need to be paying attention to, what's the next hurdle that people should be having on their radar to be paying attention to set themselves up correctly?
So I would say there's two things to be on the lookout for. We were actually just on a webinar before this, and they mentioned that there's going to be additional guidance on the loan forgiveness, and it's going to be in the form of FAQs. There's going to be probably 30 FAQs dropped within 48 hours. But on a more global scale, there's bills in Congress right now to potentially change how this PPP program is.
Nothing like upsetting the apple cart. Thank you, Congress.
Yeah, already.
What we have, and let's just toss the whole thing out.
Yeah, I mean, some people are already 5-6 weeks deep into this thing, and they want to change some things. Some things they want to change for the good is they want to extend the covered period, which we have a lot of clients in the hospitality industry that need desperately. Because they're not going to be back to full force by June 30th. There's no way, especially hotel clients where you're seeing very low occupancy rates. So that is the two things that I'd be on the lookout. One, the FAQs that are supposed to come out within 48 hours. And then also just keep an eye on Congress as they pass some bills. There was that HEROES Act that was passed a couple of weeks ago that apparently is dead on arrival. Now there's some other bills in Congress that are just PPP related because they feel that they'll be able to get that through bipartisanship as opposed to just having a quote unquote Democratic wish list in the HEROES Act that won't pass the Senate. So there's a couple of bills that I'm keeping my eye on to make sure we understand kind of what the thought process is with Congress on this program.
If this makes your head spin, don't worry, folks watching this recording back. This is making all of our heads spin, and we're so thankful to have people like this who can kind of stop, focus for a second, focusing on what's need to be paid attention to and highlight what's critically important here for all of you folks. So we greatly appreciate that. But where else should people be looking at in terms of their business now, especially here in New England, because Boston and Massachusetts and Rhode Island and New Hampshire, we're the last states to kind of come back online. I think there was a great statistic out there that it was 48 states are open. Now they're all coming back with Massachusetts finally getting on board. We're going to be back open. I think Rhode Island, correct me if I'm wrong, but you guys have already, I think you're in phase 2, correct? You're opening?
Starting phase 2 on June 1st, I think. That's
So Massachusetts and Rhode Island are a couple of weeks behind. But as things start to open back up and people get back into their offices and kind of get their hands and minds wrapped around this new landscape that we're existing in, what is something that people can be doing with their business right now to help them situate themselves for potentially this new normal with all these different things in this constantly changing landscape and making sure that their numbers are accurate? Is there anything that you're giving people to tell them as their business starts to reopen and they can get back in there, they should be doing right now?
Again, that's a very good question, and that I would say that's going to change depending on the type of business.
Sure.
I would say we're accountants. From our standpoint, is go make the money. Worry about your business. Get the customers into the restaurants to the capacity that you can. If you're a manufacturing company, obviously make sure you have the safety protocols in place. I can tell you from our office, we can only walk around a certain way. We're all wearing masks. We're all wearing gloves.
Mm-hmm.
That's important from a safety standpoint. But I know what's going to happen is a lot of people are going to go out there and concentrate on their business and continue to worry about growing their business, which is obviously the most important thing. There's going to be some capital required to start these businesses back up, because again, you got to buy all this stuff. You're starting from I wouldn't say you're starting from scratch, but you're
as close to it as humanly possible.
Yeah, as close to it as you're going to get in probably your lifetime with this pandemic. So there's going to be some operating capital. If you have some PPP money that, hey, didn't get forgiven, okay, that's a 1% loan that you can start to utilize some of that money for operating costs that you need to get back up and running. We're talking to a lot of our medical clients right now to say a lot of them are worried about bringing their whole staff back on June 1st to open up. But again, what I keep stressing to them is fill your appointment book. Get the clients in there. Bring back the staff that you need now, but worry about kind of getting business back up and running, and then the people that you rely on to help with the financial aspect from the accounting standpoint, from the business advisors, continue to rely on those people and continue to lean on those people. But the most important thing I can say is just worry about your business and worry about getting it back up and running. I know this is a little bit about the PPP. If you don't use all the money for loan qualified loan forgiveness expenditures, and it converts to a loan, it's not an all or nothing thing. So and you might be able to utilize some of those proceeds to get that business back up and running, whether it be buying supplies. Maybe a restaurant had some food spoilage from the last time that they need to get their food in the door. So again, worry about making the money, and then we'll use your accountants to help you out with
everything else. Sure.
I think the other thing, just to go off that a little bit, is communication is, some people are overlooking the fact that you can still communicate with, your clients. You can still communicate with even your employees. I think something right now where if your office isn't open, I would just make sure that you're, at the very least, like Ron mentioned, try to fill your book. If you have some way to send out a communication to, the clients that you're in contact with, just to let them know, hey, we're looking forward to reopening. We want to let you know that we encourage your support, and we're looking to get things back up and running as soon as possible. And just so clients or customers that that you're in contact with are kind of still in tune with you and your business to the best of your ability within reason. And then I think the other thing is, if you haven't touched base with your employees, maybe reach out to them and see if see how they're doing, see if they have a plan in place to come back to work, or even just to touch base with them and see, just to let them know that you're still there. So I think that's the other piece of this, that that you can do something proactive now to get a better landscape of what your business is going to look like when you do open back up.
One of the great metaphors I heard this week about this is the earthquake has come and gone. Everybody's now just kind of coming out from it. You're still a little afraid of aftershocks, but now you're checking yourself. You're making sure everything. Now it's time to get back into it and make sure everything's as it's supposed to be and how you can get this thing back going. One of the big questions I've heard this week from people, and we were asking people on our network what questions they had to ask you folks. And the biggest thing that we have and that we've gotten so far from people is, I've gotten my PPP loan or my EIDL loan. It's sitting in the account. I'm too afraid to use it because either I'm afraid of the interest, or I'm afraid I'm going to use it incorrectly, or one of these little things. is going to trip me up and I'm going to get stuck paying the interest on this, which for the EIDL loan is huge. It's 150 or 125% of the loan. And the PPP loan isn't as bad, but is still pretty bad in comparatively if you're using it incorrectly. What advice would you give to folks who have it, are afraid to use it, don't want to use it, and are just saying, I really want that time limit up so I can just, give it all back and move on?
It's one thing if a client's just holding to wait and see how their business is going to come back. So again, we have a number of clients in the hotel industry that are saying, you know what, it's like, again, we got a 4 to 5% occupancy rate in some of our hotels that, again, we're not going to just bring people back or to bring people back. It's a matter of
existence right now, really.
Existence. Figuring out how to utilize this money properly to the best needs of our business. So we have a number of clients doing that. Is kind of what you say. They might be scared, or they might just be holding it to wait for what they need for their business needs to be successful. Because in the PPP loan, again, it's a 1%, and it could be a large loan that 1% is applied on. So it could be a good amount, but using that loan properly is better off than using it irresponsibly just to
which I think is important to highlight. This is not used as somebody's rainy day fund, for a couple of months on down the road when they want to go do something with it. That's not what it's there for.
It's not, no.
You through this point in time, it's used to make sure that you can exist as you have been existing, not for something that you just want to go out and splurge on, so to speak.
Yeah, you don't want to go buy the Porsche with that PPP money. I'll tell you that. You want to do it as you're normally operating, but you also want to make the best decisions for your business with this cash to make it through the tough times. You're absolutely right. You don't want to just go take a distribution of the cash and go blow it on something that's not in the best interest for the normal operations of your business. That's the best advice we can give there.
Absolutely. Anthony, anything on your front there?
Yeah, I think to Ron's point, I mean, if you have the PPP loan, just think about the intent of those proceeds. It's intended to be used to fund very specific costs for a period of about 2 months. That's what you use to calculate how much you were going to be able to receive. I would say if there's any uncertainty as to what the loan might be used for, I think there's a whole host of literature out there that you can certainly read through the SBA, or like Ron mentioned, lean on those in the professional services industry like ourselves, your accountants, your advisors, and we can, confirm whether or not, you think a cost is qualified. But I think that, if you go back to just what it's intended to be used for, it's not, the PPP loan is very, very specific and rigid in the fact that there's only 4 or 5 buckets of things that it's intended to be used for. So I would say, I understand the hesitancy just because it's some businesses have never gone through this process as far as taking out a loan. I know some businesses are capital intensive or they just never needed the loan. So I can understand that, but that's what I would recommend is there's very specific rigid guidelines as to what it's supposed to be used for. And, if there's any uncertainty, you can certainly lean on, those of us that can provide that insight.
When you guys are thinking about it, what do you think, when we're looking back in 10 years, what do you think will be the postscript that will be attached to the PPP and EIDL loans, if anything? Do you think people are going to look at it as a help or a hindrance? And what do you think that postscript is going to look like?
That's also a good question. I mean, I think the intention was to help small businesses. The rollout has been beyond terrible, with guidance, with applications, with, again, all the rules that they're putting in place on these things. I think if they really wanted to help out the small businesses, they could have made this a lot easier. Small businesses. And then the other thing to keep in mind is, again, unless something changes, all the expenses associated with the loan, so all the expenses that you use a loan for are non-deductible in 2020. So you're going to look back, and I know it's not 10 years down the line, but next year when you go do your taxes and you had all these expenses that you use the PPP loan money for, that's a non-deductible expense, which would potentially increase taxable income in 2020, which obviously no one thought would be the intent. But from the IRS's standpoint, they see it as double dipping. They see it as you're getting tax-free money. You shouldn't also get an expense for it. But again, there's also bills in Congress right now to change that aspect of it.
Sure. Is there anything else that you guys want to make sure that is highlighted from your front on anything that you feel like anyone else out there watching this back, whether it's right now or next couple of days on out, that you feel as though people should know or potentially be paying close attention to as they kind of start looking through these things and potentially start looking at this 11-page wonderful manifesto of forgiveness, as I heard one person call it, and anything that you else feel is important for folks to know and to understand?
I mean, I'll say this is, don't be afraid to, whoever your accountant is, whoever your advisor is, don't be afraid to reach out to that individual, because they're the experts on this. Just like you wouldn't reach out to, like, I'm not going to reach out to anyone other than my doctor about my health, reach out to your accountant, reach out to somebody that's willing to help and that knows this program. Because again, there are some benefits for this program, especially if you utilize it correctly, that will really help you get through these difficult times. So just it's all about communication. We're not expecting every client, we're not expecting every taxpayer to be experts at this PPP loan. That's what we do. That's what we do for a living. Although I didn't anticipate being a loan officer for the past 60 years, but that again, we're in depth on this. We're in the weeds on this. We're reading about this stuff every day. We're learning more stuff about this every day. That it's impossible as a business owner to keep up with this and then also keep up with their business. We certainly understand that. So really, just reaching out to a professional to simply ask for help. We're more than happy to help people in this time because again, we're all in this together.
Absolutely. I think you hit the nail right on the head there, that this is not a time for people to exist and selfishly thinking that they know the answers and that they're just going to solve it because they're the business owner and they know their business better than anyone else can. This is a time to be talking to people and engaging the good folks like you. Anthony, anything that you would like to mention before we wrap up?
Yeah, I think, two things specific to the forgiveness process. I've been saying it, I've said it a couple of times when we've had these discussions. I mean, documentation is arguably the most important thing that can go into the forgiveness application. I mean, even if you struggle with the application itself, which is understandable, if you have the right support and the right backup, that can kind of lead you in the right direction. And, like Ron mentioned, you can lean on, your advisors or your accountant to maybe piece it together towards the end. But I think documentation, I can't emphasize enough how important it is. And I think the other thing to keep in mind is I would strongly recommend, if you're able to, I wouldn't wait until the 8th week to kind of start that process. I would recommend, as you go along, do your best to kind of isolate and segregate a lot of that documentation. And additionally, maybe even keep, some sort of tracking, like a spreadsheet of some sort, and just try to, maintain your records throughout the process. Because I think that if you do wait until the 8th week to do that, it's just going to be a lot of catch up and a lot of extra stress that I don't think you're going to want to incur, especially given the circumstances.
This is not a time and day and age for procrastination on this side of things. Don't let that seep in. Guys, I appreciate you, Ron, Anthony. Thank you guys so much. This has been helpful. As we said before, this is a constantly fluid endeavor. As Ron, I think you mentioned, this is going to change probably 5 more times
Exactly.
Yeah, and I would take the over on that. I would not take the under on that. I think this is going to be constantly changing. Thank you guys so much for coming out and being kind of a soundboard and allowing people to understand where they need to be paying attention to. As you said, this is a time for experts like you guys to really come in. And Ron, I know you said you weren't expecting to be a loan officer, but we appreciate all the time and effort and energy you guys have put into this. Thank you guys so much for taking the time today.
Take care, man. Thanks for